can't speak stocks, but would you segregate amongst the IT companies, or do you believe that the basket as a whole, because of business models being, broadly being similar, all of them would broadly benefit, and there will be a couple of them which will do business much better and therefore benefit more?
Actually, we like both mid-cap and large caps. The mid-caps offer more value. They don't offer the obvious advantages of scale and balance sheet. The large caps bring those on the table. So we like, actually, I think in a portfolio you can have both. So I'm not distinguishing too much between large and mid, large and small, or large and mid. I think both the subsectors have merit in investment.
But IT as a whole, the entire theme, you believe the basket would benefit broadly. Okay, the other bit is on infrastructure, and it's a wide basket again. There is road construction companies, there are companies which are operating in the port area, so on and so forth, and there are companies which cater to certain large areas like power as well. What within the infra space do you find favor with?
I think infrastructure, generally speaking, is looking good value at these levels. So I'm not distinguishing between these various aspects of infrastructure. I think the utilities, if you're mixing it up with the utilities, those I think are avoidable. Okay, because I think there are some big problems there with respect to the PPAs and with respect to coal supply. So I think those are probably avoidable. But companies that are engaged in construction of power plants are okay. Those I think should do well. But companies that are engaged in construction of roads, I think look quite good. So I'm more interested in the companies that are building infrastructure rather than operating infrastructure. So I think utilities are operating power plants. So those are less attractive to me. What I'm interested in is the guys who are actually building the stuff, because really the juice is in the guys who are building it, and that's where I think there could be momentum coming back. And
the interest rate cut cycle, if it does come about, adds that bit of vigor to some of these road construction companies.
That helps both actually, but that helps the owners more than the builders.
Sure.
So the owners, they are the ones who finance projects. So the owners of infrastructure benefit more.
But you're not playing it because of the interest rate cut?
No, I'm not playing it for that. I'm not playing it for that. I think the rate sensitive you want to buy is discretionary urban consumption. Rather than sorry?
Not banks.
Banks, we are actually still underweight on banks, but I distinguish there between public and private sector. So I think we still like the private sector banks. So I think you can buy private sector banks, but I think the public sector banks still have to go through a little bit of pain on the NPLs front. So that needs to actually turn around for them. So maybe it's a little too early to go into them. The stocks have done very well, so I think they probably want to be avoided right now.
Hi, I'm Sky.
Tell us the truth about you and Pooja Bedi.
She's a good-looking woman. I'm a good-looking person. I think so.
And?
The rest you're supposed to
edit out?
Yeah, I am most famous.
Almost Famous, Tuesdays 7:30 p.m. only on Zoom. Turn on greener planet with General Air Conditioners.
सोने का रेट तो बढ़ता ही जा रहा है, और इसकी शादी तक क्या पता कहाँ पहुँचेगा।
टेंशन मत लो, पीसी ज्वेलर की ज्वेल्स फॉर लेस स्कीम है ना, जिसमें 12 किस्तें देंगे हम और 2 किस्तें देंगे पीसीजे। है ना फायदे का सौदा? ज्वेलर फॉर जनरेशंस, पीसी ज्वेलर।
Last quarter, the banking results surprised one and all by virtue of how they performed, because a lot of people were expecting some big negatives to come out, and that didn't happen. You think the quarterly earnings performance from banking would probably stay at an uptick and at a good level, or you think that there can be alarm bells by virtue of some NPAs rearing their ugly head in this quarter or possibly the next quarter as well?
See, I'm not an expert on banking, but if I were to just do a very broad brush analysis on the earnings, they surprised because NIMs expanded, not because NPL progression stopped. I am worried about NPL progression because that NIM expansion is not that sustainable. Because there is a bit of mismatch there in terms of the duration aspect comes in there, because your liabilities reprice more slowly than your assets. So that catches up with you, especially because liability costs are not falling in a hurry. So it will catch up with them. But if the NPL progression slows down, which it didn't in the last quarter for public sector banks, Private sector banks were doing okay, but for public sector banks, there was there was still NPL progression happening. If that tends to slow down, then I think it's time to reverse the fundamental call.
Okay. Which sector or which sectors do you find the possibility of maximum margin expansion coming in? You did say that that was the big theme that you're looking forward, and because of the low base effect, so on. So
I think consumer sectors will lead it. They will probably lead the margin expansion story, followed by industrials. But I think consumers will see a lot of margin expansion because that's where all the stress was in terms of raw material cost increases.
Great. Okay, I'll come to the real estate question in a bit after this. But aside of infrastructure and possibly real estate, which we will come to, do you like anything which is in distress right now, but wherein the cycle could turn about in the next 12 to 18 to 24 months?
See, in a portfolio context, you can always have a couple of distressed names. But my approach to investing has always been one of focusing on companies with good fundamentals which are not priced in.
Sure.
But if you have a speculative instinct, and there is tendency to make outsized returns as much as there is a tendency to lose a lot of money in distress cases. I think it's not a bad time to actually buy a couple of distressed names because the market is overall a lot distressed. So eventually I think some of these distressed names will do well, but it needs to have a portfolio context. If you're going to buy just 5 stocks in the market, then I think it's a little bit excessive speculation to buy distressed names. But if you're going to have a portfolio of 20, there's no harm in having a couple of highly geared companies which will tend to benefit if rates come down, or companies that have got problems with cash flows right now because of some regulatory issues which may get resolved, the regulatory issues are overcome. So those event or scenario-based companies, I think, may be worth a shot.
Okay. Why real estate, Ridham?
No, I said real estate in the context of infrastructure, but actually it should be in the context of financials because real estate is actually a subsector in financials. Real estate, I think, property prices and property demand, I think, has the chance of rising in the next 12 to 24 months. We had a fairly difficult environment in the last 2 or 3 years for a lot of these companies. Some of them have been sitting on oversized balance sheets, a lot of debt, and they have been attempting to restructure their portfolios, sell land parcels and delever, reduce the size of the balance sheet. I think the market is also looking up. It's in a way tied to my urban consumption theme. So urban demand for property will go up. I'm actually quite stunned with the recent statistic that came out of the census, which showed that the average urban household size has gone down below 4 for the first time in India's history. I think that's a striking number. It basically shows that nuclear family are increasing in this country. So that's a very strong undertone for property demand in India. And given how prices have behaved over the last 4-5 years, I think the household today has got a better buying power. Because his income levels have risen faster than property prices. So now he has better buying power. So I think we have reached a stage, if interest rates start coming off a bit, I think you will see property demand recover ever so slowly, but it will recover. So I think some of these stocks represent good value, which is why I would go. I wouldn't recommend distressed balance sheets, but I think there are a bunch of stocks which don't have such distress on their balance sheet, which have got good business models, are following good governance standards, and I think generally speaking should deliver returns to investors.
So one final word, Ridham. Over the next 12 months, or rather let's look at some triggers over the next couple of months which will probably give a direction to the market over the next 12 months. What, according to your mind, is probably the biggest positive, if it happens, would be? Say maybe margin expansion, say maybe a better than expected rate cut delivered by the RBI. What to your mind is the biggest key trigger that will push the markets higher?
I'm not going to put it down to one because it's never so simple. But I think you can break it up into 3 buckets. So think global first. So globally, I think a lot of things will happen which are fairly uncertain right now. We are not sure where US growth is heading, and the jury is out. And it seems to be oscillating between a recovery in growth and tepid growth. And also do not forget it's a presidential election year. So it's a complex scenario in the US. At the end of it, I think India needs a benign outcome in America. We don't need any extreme outcome there. The second is how the deleveraging in Europe progresses. Right now, it's not the central debate in the market, but mind you, just 3 months ago, it seemed to be India's death knell. LTROs have seemingly succeeded in pushing that debate into the background. But the deleveraging in Europe is not over. And Europe has a structural issue. So it will come back. So watch out for how that happens. From an Indian perspective, what is crucial is the pace of deleveraging. It's a given that Europe will delever. But if that deleveraging happens in a short span of time, it will hurt India. I think the third thing is obviously oil and what happens to oil. And in the case of oil, there are multiple factors that can affect oil. So QE3 can affect oil, supply disruption can affect oil, Chinese demand can affect oil. So, oil can get a lot of factors to shock it. Locally, obviously the RBI policy and therefore inflation. I think that we need to watch that very carefully, and we know there are dynamics around inflation. Second is corporate fundamentals, which I think is far more critical than the market believes right now. To me, that could eventually turn out to be the most important factor in the next 12 months. And all these macro debates will recede in the background. And the third is, what happens to policy momentum. So that is, again, something that can lift the market and lift the sentiment at various points in time. I would say the expectations are very low. Nobody really expects any big bang reform. So if a change happens on that front, it will be hugely positive for the market. And the final thing is about where the market is in terms of valuations and what's happening to the demand for shares. And I think that seems to be quite favorable. So that, I think, continues to act in favor of the market. So I think this is the way I would look at the various triggers. So if I were to pinpoint one, then I think it's corporate fundamentals with a 12 to 15 month view. But in the next 3 months, a lot of these things will play around with the market. And I didn't talk about things like monsoons and other factors that usually have their seasonal role in market behavior.
Great. Suffice to say, you're sounding a lot more bullish than maybe what I've heard in the past as well. But thanks so much, Ridham, for joining us on this edition and giving us your views. Thanks a lot.
Thank you.
Presenting India's biggest awards, recognizing the performance of stock analysts and brokerage houses.
I believe you're going to see a resurgence of activity in the Indian market.
Which of the analysts and brokerages will win top honors at the awards?
I think that investors should still have a very underlying positive view of the world outlook, reflecting the strength of the emerging economies.
PC Jeweler presents ET Now Star Mind Analyst Awards 2011-12. Only on ET Now.
Star Mind Awards presented by PC Jeweler, Jeweler for Generations. In association with Panasonic Econavi AC. It's one touch to change the future. Standard Chartered Bank, here for good.
It's not like I don't trust her.
I like to keep an eye on him.
So I pin her to my home screen.
To get constant updates from all his profiles at one place.
So now I know where she is.
And what he's doing all the time.
Hey!
Whoa! What a surprise!
New Nokia Lumia 800 with Windows Phone.
This is coal and this is water. Okay, now let's knock off some coal and add some water. Ah, that's a good mix. But guess what? Because we make more hydropower, which is greener, the earth stays beautiful. This is just one of the many ways in which we create power for a happy planet. Jaiprakash Power Ventures Limited, the power to do good.
Berger Rangoli Easy Clean Paint with cross-linking polymer, जिसे दाग जाए पर रंग न जाए. No दाग, no धब्बा. Only beautiful walls. Hands up. नए Samsung Galaxy Y Android स्मार्टफोन्स अब डुअल सिम के साथ. देश स्मार्ट बन रहा है, आप डुअल स्मार्ट बनिए.
Aditya Birla Group, taking India to the world.
The headlines on Global Business Report. Global equity markets take a big knock. US third quarter GDP data and the jobless report add to the gloom. Wall Street is seen opening in the red. European markets have hit 3-week lows.